Hello viewers, welcome back to Krishna Study Plan. Now let's go through final accounts sum which was asked in March 2024. The reframed question for March 2024 exam is available in the description for you to download and view the question. Now let's go through the question. Prepare the final accounts of Vishnu Traders for the year ending 31st March 2021 using the following trial balance. Okay. Now, first and foremost, as you know, let's find out the adjustments. Okay. First adjustment that we need to find out is purchase and sales. Purchase, do we have purchase written? Yes. Put a dot. Sales, do we have sales written? Yes, we have. Put a dot. Now, next thing, let's go to adjustments very quickly. Wages outstanding, put a dot beside wages. Closing stock, no need. Prepaid insurance, put a dot beside insurance. Depreciation on machinery, put a dot beside machinery. And obviously for capital also, we need to put a dot because anyhow we are going to have the adjustment to add the net profit or net loss. Okay, let's quickly complete this sum in very quick, like we are taking long time to solve the questions. This question should be completed very quickly. Chalo, let's start. Debit side items of trial balance: cash. Cash is asset, as we know. Cash 3000. Second, purchases. Purchases, two purchases. We have adjustment. We'll write the amount in inner column, 5000. Wages, trading account, two wages. We have adjustment. We are writing it in inner column, 1000. Next, opening stock, again trading account, opening stock, auto column 2500. Next, salaries. Salaries is a P&L item. P&L item. Let's differentiate P&L. Okay. Two salaries. Two. And that is 1000. Do we have adjustment? No. Direct auto column. Next, insurance. Two insurance. Write the amount in inner column because we have an adjustment. Next, carriage on purchase. Purchase is we are purchasing raw material, and carriage. To carriage on purchase. That would be trading account 500. Next, furniture. Furniture is nothing but asset. Furniture 2000. Next item, sale return. So sales returns, we have sales, buy sales, inner column 9000 less sales returns, return 600, outer column 8400. Next, rent. Just rent is nothing but office rent. To rent 800. We don't have any adjustment. Machinery, we have an adjustment. Machinery, we are writing 5000 in that column because we have an adjustment. We'll give some space for rent. To rent, how much the rent is? 800. Sure. Next, debtors, the persons who are going to make us the payment in future. This is the amount that is receivable. Receivable will be asset for us. Next, discount on the debit side means we gave the discount. Okay, that is to discount 400. Next, bills receivable is asset, payable is liability. Okay, bills receivable 11,000. We are done with the debit side items. Now quickly let's complete the credit side. Bank overdraft, I already explained you. We have withdrawn more than the limit that we have, more than the balance that we have, and this is payable to bank, so that is liability, 11,000. Sales we already recorded. Purchase return, how much purchase return? 500 minus purchase return 500, and 4,500 is outer column, in the outer column. Chalo. Next, capital is 15,000. Capital is a liability, as business and owner is different. We will have adjustment. That's the reason why we kept it inside the amount. Commission received, okay, that is income. Okay, by commission received, how much we receive? 1,200. Next, creditors, the person to whom we need to make the payments. We took services or goods on credit basis, and we need to make the payment to this. We are done with the trial balance, all the items. Now quickly let's go to the adjustments. First adjustment, we always remember adjustments have two effects. Okay. Excuse me. Wages outstanding 300. Outstanding wages means add outstanding wages to wages, and the outstanding wages are 300, and total in the outer column 1,300. Okay, this is the first effect. Second effect, outstanding wages are liabilities, wages 300. Next, closing stock, buy closing stock in the trading account, 4,500. Again, this is first effect, and second effect is closing stock is an asset. Closing stock 4,500. Third adjustment, prepaid insurance. Prepaid means we have already paid, then we need to deduct. Prepaid insurance minus prepaid. From insurance we are going to deduct prepaid minus 400, difference in the outer column 500. Okay, prepaid is nothing but asset. Okay, outstanding is nothing but liability. Prepaid is nothing but asset. Prepaid insurance, prepaid insurance, how much? 400. Last but one item, depreciation on machinery 10%. Let's depreciate machinery by 10%. Depreciation 5,000, 10% is nothing but 500, 4,500 in outer column. This is first effect, and second effect, depreciation will be an expense, and to depreciation on machinery, and that is 500. I think we are done with all the entries. Now let's do balancing. Let me quickly take my calculator. Chalo, let's start. First, let's find out the balancing figure, and later on let's decide if it is a gross profit or gross loss. Let's do the debit total: 4,500, 1,300, 2,500, 500. That is 8,800. 8,800. Chalo. What is credit total? 1,400, 4,500. That is 12,900. 12,900. That is higher, so that's why we are putting it as balancing figure. And how much is the difference? That is 4,100. 4,100, and that would be to gross profit carried down. Do not forget to put carried down, brought down. Now this gross profit carried down will be taken into P&L by gross profit brought down, and the amount is 4,100. Now quickly do the math. 4,100 plus 1,200 is 5,300. Okay, and here 1,500 plus 800, 400, 500, 3,200. The debit total. Let's put the balancing figure. So which is higher? Credit amount is higher. Let's put it as a balancing figure. 5,300. 5,300. How much is the difference? That is 2,100. 2,100, and we call it as to net profit carried down. Okay, now this net profit we are going to add it to the partner capital. Okay, 2,100. 2,100 add net profit. Okay, then that is 17,100. Now let's quickly calculate the totals of liabilities and assets. If that match, then we are good with the sum. 17,100, 4,300. That is 32,400. Let's quickly calculate the assets. 3,000, 2,000, 4,500, 7,000, 11,000, 4,500. That is 32,400. So the assets are equal to liabilities. Hence our sum is correct. In this way you can practice your sums, and these sums are very pretty easy sums. Okay, thank you for watching. Have a good day.